what do you think? What like pivotal change, like global or local change, has to happen for the masses to flip to Bitcoin? What do you think is going to be that determining factor that makes many people flip at once? You know, many people use the whole gradually then suddenly. What's going to be that suddenly for the masses to flip to Bitcoin?
Yeah, great question. And it's the loss of trust. And now the catalyst to the loss of trust, in my opinion, is the hyperinflationary depression that we're now going into. And I think this can best be defined by someone like Warren Buffett, who is so entrenched into the old school way of doing things
Hmm.
that he's kind of missing how, I mean, don't get me wrong, obviously a great investor. Look at his company. I mean,
Yes.
it's eh, you can't say too many bad things about the guy. He's really good at what he does. You have to respect that. But at the same time, it's like somebody who doesn't want to adopt the internet, or it's someone who doesn't want to adopt the cell phone and they just want to continue to write letters or only have a storefront with no digital marketplace. You're not going to perform as well. Something, you're going to be lagging behind. And his investing mindset is now has Berkshire Hathaway at $277 billion of cash.
Hmm.
So he knows a crash is coming. Everybody knows a
Yes.
crash is coming. The problem is that we are moving from an inflationary recession to a hyperinflationary depression. When this crash comes, it's going to be worse than the Great Depression. Now, your listeners are listening right now and saying, "Oh, prices are going to go down." Well, why are you saying that? Because when prices go down, your quality of life and your standard of living go up. So if we had a Great Depression, your overall net worth would go down, but your quality of life and your standard of living would increase if you have dollar savings. But
But
that's
but to
not what's
that
going to
but
happen.
but to
That's
that
not
point, but to that point, that requires the government to allow that to happen, right? And you know better than any of us. I mean, they can just keep this game playing, and they can keep delaying the inevitable of a massive crash like that.
right. So that's why I think everybody's that's why there's $6 trillion on the sideline waiting to buy the dip.
Hmm.
And that's the educational component here. You have to understand that when we in an inflationary environment where we have fiscal dominance, where government spending and deficit monetization drives prices, this is the issue. When you have a crash, prices crash up. They don't crash down. That's the actual problem. That's what Warren is missing because that's the paradigm shift. Most of his career didn't work that way, and now the paradigm has shifted. Everything that he studied, and when he was in the 70s and 80s, he was living it. He was navigating it, but he studied from the 40s and earlier. We get the chance
Hmm.
to look back and study the moves that he made during those
Hmm.
times and go forward. So now where he is in life, that's why people retire so that you can enjoy those final years. Things have changed, times have changed. You put in your value to society. Now you can sit back and relax and enjoy the fruits of your labor. And what he's missing is that there's been a shift. There's been a foundation. Yes, a crash is coming, but it doesn't work the way you think it's going to work, Warren. The prices aren't going to go back down. Your 277 billion isn't going to buy you more. It's going to buy you less because its prices are crashing up. And it's the problem is purchasing power is crashing down. And that is why this crash is going to be worse than the Great Depression, because the Great Depression would actually increase your quality of life and standard of living. It would allow more people to participate in the economy. This time around, everybody's going to be a millionaire, but nobody's going to be rich. And the economy will die from demand destruction, from prices going up and up and up and up and making life less affordable, reducing quality of life and standard of living. We are heading into the crash, but the crash is in the purchasing power of the dollar, not in asset prices. That's
Hmm.
what people are missing. And that's the educational component that I think is actually more understandable than Bitcoin as engineered money. That if people could just understand that there's been a shift of the results and the effects of a crash or a problem. Look at
Hmm.
Silicon Valley Bank. We had a
Hmm.
crash. What happened? Bank term funding program. Liquidity
Hmm.
rose. That's
Yes.
inflation. We fix things with it. We target inflation. So until the central bank comes out and says we're no longer targeting inflation, well, they're going to fulfill their mandate to keep prices steady and employment steady. They're going to use inflation to target inflation to create inflationary growth, which, as you well know, is not real
Hmm.
economic
Hmm.
growth. It's a false growth that doesn't pass through the system the same way as a strong economic demand does. So that's the issue. If people can just learn, yes, we're going into a crash, but the purchasing power is crashing, not prices. And
Hmm.
that's the mix up. So hopefully, those who are listening to this, you can tell your family and friends and share this and get people
Hmm.
to understand the best way to prepare is to keep your savings in Bitcoin, because Bitcoin
Yes.
is an absolute scarce asset. You can expand the supply of gold. A
Hmm.
lot of the gold bugs will tell you, oh, when BRICS backs their currency with gold, they're going to reprice gold. Gold's going to be $50,000 an ounce. The problem with that is that if the price of gold overnight goes from 2,500 to 50,000, the cost of production didn't. So what are they going to
Hmm.
do? They're going to build spaceships to fly out, get asteroids, and increase the supply of
Exactly.
gold in ways we never thought about. So absolute digital scarcity is why Bitcoin is the real bailout, because it's the only way to protect your purchasing power. It's the only way your purchasing power will grow over time because of that absolute digital scarcity. Then you get the added bonus, inflation protected your purchasing power as a result of protecting against inflation, but it doesn't have a
Hmm.
difficulty adjustment. Bitcoin has a difficulty adjustment. So inflation is just like a bonus booster to Bitcoin. Bitcoin doesn't need inflation to go up in price. The growth of the network will cause that through the relationship
Yes.
between hash rate and difficulty and cost of production. And that's the real magic component of Bitcoin. It's a double whammy. You get protected from inflation, but you also get engineered money that was designed to be the
Mm.
best store of value we've ever seen.
So, in a nutshell, what you just said there is once society realizes we live in a superficial life of prosperity, and realize there's a harder currency or a harder option out there, that's when the flip comes.
That's right. Because people will be working harder, they'll be making more money, but they'll be buying less stuff and they'll be living a lower quality of life and standard of living. And that's why I say, this next move into hyperinflation, there's $6 trillion on the sideline. Where's it going to go? When
Hmm.
rates go back down to 5%, or maybe to 4.75 or 4.5, whatever that target range is, some of that money's going to come back in. Then when it goes down to 4 and 3.5, some of that money's going to come back in. Then if something goes wrong and they have to have an emergency cut down to zero, all that money's going to come rushing back in. And if there is no emergency cut and they just keep lowering and lowering, lowering, the money's going to keep coming back in. And as the money comes back in, it creates demand. And demand against limited supply forces price up. So, and when rates are lower, people are going to borrow more. So not only will you get increased economic demand, you're also going to have currency inflation because the government is going to have to support the economy that the Fed just destroyed, which means deficits are going to grow because the income from the economy is going to shrink. Tax receipts are going to shrink, but your costs are going to stay the same. Deficits increase. That you need more inflation. Interest rates down, people are going to borrow more money to make it through the tough economy. That creates inflation. $6 trillion that earned 5% for the last couple of years is going to come off the sidelines and create economic demand. That creates positive price pressure. We are going into what I think is going to be the worst wave of inflation that we've seen in the history of the United States. It's going to create new all-time high prices in assets, and it's going to create new all-time high inflation rates that we have never seen because it's a triple threat. We're going to be seeing it from the printer of the government, from the printer of the banks, and from the spending of people who have the money on the sideline who now need to get back into the assets. And that could be, in my opinion, I think it's going to be because I think prices are going to go up a lot faster than people anticipate, even in Bitcoin. I think prices are going to go up just at a sickening rate. Like just think of where we were before 2020 to where we are now. You look at the median price of a home and you're like, whoa, man, I'm a genius. I made a great investment. But no, in inflation adjusted terms, you're still even. Your home can't buy you more of anything else. It can't buy you more Apple stock, can't buy you more
Hmm.
Nvidia, can't buy you more Bitcoin for sure. It can barely buy you more of anything. You'd be lucky if you're even. It can't even buy you more steak and eggs and lettuce because the prices are just break even at that point. So you're not really growing wealth. And that is the issue. And hyperinflationary depression, I think, is what people will react to. And I think is what will be the catalyst to losing trust. And if that's the case, then watch out because, when you have a 30-year mortgage and you can go pick dollars up off the ground and walk into the bank and pay your mortgage payment, we got problems. We got really big
Hmm.
problems.